All right, guys, welcome back to another market recap of last week and what we could be expecting for this week. So today is Monday, and the markets last week really didn't do much. It was actually quite boring, and I had a little bit of trepidation going into last week Monday, simply because there was some key reports that were going out in terms of the jobs report, the construction report, and then also the manufacturing report. Now, the construction report was kind of what I expected. The commercial side projects, in terms of new buildings and so forth, is not doing so great, which was expected. But on the residential building side, I mean, that's booming. Now, the manufacturing side, surprisingly, was actually doing quite well. And it does speak to the economy kind of opening up a bit. So I'll get into that in a little bit. However, the jobs report was a bit of a mixed reaction. It wasn't great, but it wasn't bad. So kind of just like meh, just lukewarm, if I can put it that way. But ultimately, the stock markets last week kind of shrugged off any forms of negativity and actually all ended up in green. Today, we are seeing just fractional losses in terms of the NASDAQ, the S&P 500, and then the Dow Jones. But I mean, this is really fractional stuff. We got gold. Gold is still doing really well. The gold you've got to have a look into, particularly now, because there's actually a regulation that's going to be kind of formalized. I think it's on the 25th or the 27th of this month. But I'm actually going to do a dedicated show on gold itself and this particular report, which is called the Basel III reports, and what that means for gold. And it's actually really good because gold kind of does need that little incentive, that catalyst, just to break through that 2,000 barrier. And I believe that Basel III is actually that barrier. But I'll do a separate show on that's entirely dedicated to gold and this particular legislation that's going to be affecting gold itself. Now, crude oil, also a little bit slightly down, but it had a phenomenal week, and I'll speak to that in a slight bit. But also Brent as well was really doing well. But overall, on the S&P 500, you can see the real estate is doing well, healthcare is doing well, energy and finance is slightly back a bit. And people just taking a bit of profits, yeah. So nothing really to worry about, but I want to see what is potentially happening for this coming week, and then we'll start diving down into a couple of other things in terms of how to position yourself. So if we have a look here, so this was the manufacturing ISM report that came out last week, and basically manufacturing grew in May as the manufacturing PMI registered 61.2%, or 0.5 percentage points higher than the April reading of 60.7%. The manufacturing PMI continued to indicate strong sector expansion and U.S. economic growth in May. So this is inevitable in a sense of an economy reopening up. So it's good to see manufacturing doing pretty well, increasing in terms of production. And this is fantastic news for crude oil. And this is why crude oil last week was doing phenomenally well. And I actually want to get into that shortly, but I want to just see very quickly what is happening in terms of this week, because there is a couple of big plays happening. So if we have a look, the week ahead calendar, so Monday, not really too much excitement. You got the consumer credit though, that's something to look out for. Tuesday, got a couple of earnings like Thor Industrial. Let's go down here. International trade, also quarterly financial reports. Wednesday, Campbell. Now, this is quite interesting. GameStop, as we know, that is quite a meme stock nowadays. So I'm expecting a bit of a rally in terms of that. So probably tomorrow you'll start seeing a bit of a rally on that one. It has become a meme stock. So so watch out plays on that. But typically I'll stay away from this stuff. If we go down Thursday, The CPI, again, very important. Quarterly service survey, federal budget, again, very important. And then Friday, the consumer sentiment. So really Thursday and Friday is potentially big news that could affect the markets. I don't know how the markets will react because we'll have to have a look and see what the CPI has to say and the federal budget has to say. So all eyes will really be on the federal budget in terms of, are they going to start tapering now? And so that's going to be very interesting in terms of the market. In other words, is the Fed going to do a rug pull on the market? I don't think so, but let's see what's going to happen there. And then obviously consumer sentiments. And I think consumer sentiments will have a bit of a mixed bag because potentially inflation, but also because of the economy coming back into play and people getting jobs and so forth. So Thursday and Friday is going to be very interesting. Now, I want to get into crude oil. So, the Bank of America believes oil could spike above $100 before the cycle plays out. And I'm actually in agreement with that because there is some really great fundamentals that are coming into oil. And oil, like I said in previous videos, oil is actually entering into its new 12-year bull cycle. So I think $100 is quite realistic. However, this is also going to be great news for the stock market because this will drive the energy market up, and this will also drive the financial sector up, which will ultimately prop up the US economy itself. So the game really to be playing right now is in energy and your financial stocks, banks, and so forth. And this other news on crude oil higher, and payrolls point to further US growth. Okay, so really positive news for crude oil, and I believe it will still keep going up. Been consistently maintaining a bullish mantra on oil, and it looks to be playing out. We've got a couple of energy market calendars look ahead. This is why I'm saying energy is the play currently. So private Cushing stockpile estimates, American Petroleum on Tuesday, Institute weekly reports on oil stockpiles. So this is going to be very crucial in terms of supply and demand. Then Wednesday, we've got more crude stockpiles, gasoline stockpiles, distillates, inventories, and then US oil rigs on Friday. So yeah, so some really interesting news that's going to come out in terms of oil. So please watch oil. And oil is just such a lovely play right now. And if we have a look and see on the uranium side, some news on that. So Russia plans to revive the world's largest new uranium project. So pretty much what happened after the whole Fukushima, some of the licenses pretty much ended. They weren't really renewed. So given that there is starting to become demand now, I did a video on why you should be looking at uranium as an investment. And this is really speaking to that because even the Russians are actually even saying that demand will eventually come because of this 2050 carbon tax-free, and uranium will have a role into that. Nuclear energy will have a role. So they are renewing licenses. So this is really good in terms of uranium. So, and it's the world's largest new uranium project. So great news all around for uranium. Okay, so we got the US coming back in terms of their jobs, reviving their economy. They're out of this COVID situation now, most of the world. And America's kind of upbeat right now. So you got strong job growth in the United States is very good news for the rest of the world. The sheer size of the US economy makes it the engine that powers much of the global trade in goods and services. And as consumption in the US rises, other countries can expect to see that reflected in greater demand for export. So what this is telling you is you need to start looking at emerging markets now. So the likes of India, which is playing quite a significant role. And I actually do believe that they will be competing against China in terms of supply chains. But you got to look into Africa in terms of commodities, particularly if the US is going to be going ahead with Biden's infrastructure plan. That's going to be fantastic for gold again, and silver and platinum and so forth, and steel and you name it. So look out for that. But ultimately, you want to start looking at emerging markets now and start spreading and diversifying your portfolio because demand is going to come from the US for all of this. Okay, so to speak to that, emerging markets, so we can see if this is from Bloomberg, so mind the gap. So emerging market stocks outperforming developed peers in recent weeks. And that is just simply because the developed nations are coming back into the fold in terms of the economy being resuscitated. And this is driving up demand and supply, demand from the developed worlds and driving supply coming out from the developing nations. So what's at play is going to be oil, it's going to be the energy sector, and it's going to be the banking sector, but most importantly, it's going to be the emerging markets. Just very quickly, if I have a look across the US pond to the UK, we've got UK manufacturing PMI hits record, housing prices surge, oil rally as it happened. So this rolling coverage of the latest economic financial news. This was really last week. So the UK also upbeat. Their economy has been resuscitated. People getting back into jobs. There's a bit of a housing boom. So all in all, the UK economy is starting to get that feel-good factor itself. Hence why you also saw on their side the Brent crude shooting up. You got UK factory activities rose. So again, this is all aiding in terms of the emerging markets coming in to supply these type of developed nations. So hence why I'm saying these are more indicators you need to start looking in terms of investing into the emerging markets itself. So just a little bit left field, we got the Connecticut unveils proposal for marijuana legislation. So it is happening pretty much. Eventually all the states will be legalizing marijuana. So this is actually an industry I need to get a little bit more in itself. So that is good news ultimately for the marijuana industry. But I know it's going through a little bit of stumbling blocks and so forth, but it is quite a speculative investment or industry currently. It still needs to mature quite a bit. But yeah, I mean, look, if you're in marijuana, I mean, this is good news. Okay, let's go to the crypto side very quickly. So last week, not a hell of a lot happening in terms of cryptocurrencies, you know, Elon Musk and China, whatever, man. But we can see MicroStrategy stock slides after announcing new $400 million debt raise to buy Bitcoin. I mean, this is a win-win for Michael Saylor. He, you know, the stock's going down. He can buy them cheaper. It's good news for him. And he's investing more in Bitcoin. Bitcoin will also go up. So he's going to make money from that. It really is an all-round win-win for this guy. I mean, just pure genius. And a little bit of good news as well over the weekend. Everybody should have heard, and if you haven't, you've been living under a rock, but El Salvador to make Bitcoin legal tender and effectively making it an actual legal currency in that country. In fact, they're going so far in terms of actually inviting blockchain or crypto entrepreneurs into their country. Now, they're doing a very smart thing because China is being very anti-Bitcoin and anti-Bitcoin miners simply because it's competition to their digital currency, the Yang, which they're trying to roll out. So it's competition with that. And it's going to be driving all of that talent and all of that type of business into countries like El Salvador. And El Salvador is brilliantly taking this type of opportunity, and they could effectively position themselves as being the world leaders in terms of cryptocurrency by inviting all of this talent into their country, effectively creating more jobs and being a powerhouse actually in South America. So this is fantastic for El Salvador. I think this is a brilliant play, and this is how you as a nation uplift your people at the end of the day. So yeah, this is fantastic, and this will be the first nation, and many more will inevitably follow suit. So this is really great. Anyway, that is my talk. Bitcoin is currently boring right now. Everything is kind of boring right now. So, but yeah, as mentioned, in terms of play, oil, your energy stocks, your banks, financial stocks, and have a look into the emerging markets, because that is going to be a booming sector. All right, this is Chris Trade. Hope you had a great Monday and have a great week. Until next time, peace out.